If somebody who's been observing the Fed now for 30 years, that's me in my business career, I think it's very useful because it gives me a pretty good idea about what every participant around that table is thinking. And when there are differences, it gives us a basis to debate. So I think it's very useful. My own view, just my dot, has been GDP growth, for example, this year would be between 2–2.25%. I think the unemployment rate's 4.4% now. I think it's going to decline further as we get into the end of this year. It's not the only employment measure I look at. I look at something called U6, which doesn't go on the dot plot, which I'll come back to. And my own view is inflation will slowly but gradually over the next 2 or 3 years, not immediately, but over the next 2 or 3 years, get to 2%.
Within your wonderful books on leadership, there is implied through all these books confidence. One of the great mysteries in this room at the Council on Foreign Relations, one of the great mysteries in your Dallas district is where is business investment? Where is the confidence to move forward? Let me just start with the mathiness. Is it because the people that you used to talk to at HBS, they can't figure out where the risk-free rate is? Are the distortions so great?
So let's take the first part. Business confidence right now is high. Okay, there's a lot of business optimism. And you see business investment is stronger this year than it's been in the last few years. The issue is that's great and it can help GDP growth, but 70%, approximately 65–70% of the economy is the consumer. So at the end of the day, businesses are more optimistic for several reasons, but ultimately everyone is watching the consumer. The consumer is the primary driver of GDP growth. Increased business investment, though, helps, and businesses right now are optimistic. Do they see it? The disconnect right now is while they're more optimistic, then when you ask a business leader, do you see improvement in your business? Oftentimes the answer is not yet, but we're expecting it.
We're expecting it.
Yeah.
We're still there. Does that have to do with Reinhard Rogoff length or duration coming out of the financial crisis? It just takes time to heal, or is there a new format of globalization where American business is waiting to pull the trigger on the nostalgic investment we remember?
So for me, I think some business leaders are hopeful that fiscal and other policies might help improve GDP growth. That's part of it. And in addition, though, some of the things that have been headwinds, which I don't think are going away, sluggish population growth, which has a big impact on consumer spending, and sluggish GDP growth, but also increasing disruption and new business models increasingly are displacing old ones, which are giving many business leaders pause. Even though they want to invest in their business, they're not sure that the model that they're investing in is going to be sustainable. So I think that's a countervailing headwind